Well, we're going to stick with that story and bring in our business team. Paolo's here for us. And Paolo, you've got more details on how those port issues are actually now affecting the global economy.
Yeah, it's not just the U.S. that's feeling the pinch. So the global economy really relies on the smooth flow of goods across borders. And when that doesn't happen, prices go up for everybody. We'll have more in a moment. Supply chain bottlenecks are pushing up the prices of a wide variety of products. It's adding worries that inflation may hobble the world's recovery from the pandemic. In China, the cost of producing goods climbed more than 10% last month, the fastest rate in 26 years. Factories in the world's second largest economy have had to pay more to keep operating due to the record price of coal, the country's favorite fuel. In the U.S., higher prices for food, housing, and new cars are taking bigger bites into American paychecks. As a result, consumer inflation surged to almost 5.5% last month, the biggest jump since 2008. That reinforces expectations the U.S. Federal Reserve will start to taper its support for the world's largest economy to keep prices in check. Now, for more on the story, let's go to Han Tan. He's the chief market analyst at the Exinity Group in Abu Dhabi. Welcome back to the program. Good to have you, Han Tan. Let's look at the U.S. first. The Fed has sent strong signals that it'll start its taper of its bond buying program at possibly its next meeting. But its other key metric is job creation, and we're not really seeing good signs on the U.S. labor market's recovery. What are your expectations from the Fed?
Yeah, look, I think the general idea is that if the U.S. labor market fails to meet the Fed's criteria for substantial further progress, then we could see a delay in policy tightening by the Fed. So I think markets are already looking past the tapering scenarios and considering the timing for the rates liftoff. So if we look at the Fed funds futures right now, markets are fully pricing in a hike by November 2022. But if the jobs growth disappoints, then I think we could see the unwinding of those expectations, and those shifts could be manifested in bonds, in the dollar, gold, and of course stocks as well.
Now, back to China, factory gate prices there were surging, but so far those costs haven't really been passed down to consumers. How likely is that to continue given what we're seeing in the energy sector?
Right. So I think what you're referring to is more for the onshore consumers in China. Granted, CPI appears to be relatively muted compared to the CPI readings out of the UK and the US and the like, right? But I think it's certainly a major risk that global investors have to keep monitoring. It's certainly a debate that's currently raging within the walls of the Fed and other major central banks as well. So if you look at, say, the break-evens on the 10-year, they are climbing as we speak, closer to their highest since May, I believe. So it tells us that inflation expectations are climbing, at least for the US, and perhaps Team Transitory is losing support. So I think this really brings into sharper focus what the fiscal and monetary policy sides can do to rein in consumer prices if they get out of control in order to not derail their respective global or their respective economic recoveries.
All right, Han Tan, thank you for joining us from Abu Dhabi. Now to other top stories from around the world. G20 finance ministers have ratified plans to impose a minimum corporate tax rate of 15%. During a meeting in Washington, D.C., they agreed to roll out the fiscal reforms by 2023. 130 countries have signed on to the initiative. It's expected to discourage companies from setting up offices in tax havens and raise tax collections for many economies. Singapore's central bank has tightened its monetary policy for the first time in 3 years as the economy grew 6.5% in the third quarter. The Monetary Authority of Singapore increased the slope of its currency band slightly from 0% previously. The policy tightening comes at a time of increasing inflationary pressures as the global economy recovers from the pandemic. And e-commerce giant Amazon allegedly copied products from third-party sellers in India, then gave those in-house versions preferential treatment on its site. According to a Reuters analysis of internal documents, Amazon had a team that would find and replicate some of the best-reviewed products on the platform. The company denied the allegations. And that's all from Business for Now.